Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to focus on Corporate Transparency Act, and specifically we're going to talk about when an LLC or a corporation is considered to be inactive or dormant under the Corporate Transparency Act. Now, to start off, let me throw a word of caution out there that this video is for educational purposes only, and it is not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent attorney or CPA who can listen to you and help you out. So the common question I keep getting from owners of LLCs and corporate owners is people want to know when their company is considered to be inactive or dormant under the Corporate Transparency Act. Now, why is this question important? This question is important because if we go into the details and we realize that your company, based on the definitions that's been set up or laid down by the Corporate Transparency Act, if we determine that your company is inactive or considered as dormant under the law, then you're not required to provide ownership information of that company. So that means that you are excluded from reporting. But then care must be taken when making such decisions. Okay, and that's why this video is going to be helping you to walk you through the various conditions that needs to be met before a company can be considered as inactive or dormant, to the extent that they don't have to report beneficial ownership information. Now, to begin the whole process of explaining how this thing works is we first need to know the enactment date of the Corporate Transparency Act. Okay, so the Corporate Transparency Act was enacted by Congress on January 1, 2021 as part of the National Defense Authorization Act. Now, why is the date of the enactment important for dormant or inactive entities? Now, the date is important for two reasons, okay? The January 1, 2021, which is the enactment date, is important because you have to know that date. And once you know it, there's also something that you need to be aware of, that no entity that was created after that date of the enactment is intended to qualify for exemption as a dormant company. Okay, so once your company was formed after January 1, 2021, it doesn't matter whether the company is not operating, whether it's, not functioning, it cannot fall under the definition of dormant company under the CTA. So the date itself alone, the date in which you form the company alone, takes it out of that dormant company definition under the Corporate Transparency Act. So to summarize, no entity created after the date of the enactment is intended to qualify for exemption as a dormant company. And when is that date of enactment? That's January 1, 2021. All right, so now that we've gotten that enactment date out of the way, let's focus on the various conditions that one or a company needs to meet to be able to be considered as inactive or dormant under the Corporate Transparency Act. Now, there are 5 conditions that a company needs to meet to be able to be considered as inactive or dormant under the CTA, and all of these 5 conditions must be satisfied, okay? So you cannot fall into one condition and forget about the rest. You have to bring all those 5 conditions together. And if any of those conditions disqualifies you, then that's it. You're not an inactive or dormant company under the CTA. So we're going to start with the first condition, okay? Now, let's take a look at what is required to be considered an inactive or dormant company under the CTA. And the regulation or the law basically lists out 5 conditions, okay? So you need to satisfy all of the 5 conditions. If you fail one of the condition, you are not considered as inactive or dormant. So the first condition that needs to be met is that you must have been in existence Okay, your company, your corporation, or your entity that you registered with the Secretary of State must have been in existence on or before January 1, 2020. So that's the first condition that you need to pass. Okay. The second condition is that your company, whether it's an LLC or a corporation, must not be engaged in active business. So meaning that it should not participate in any type of active business. The business, it's basically all that you need to have is to have a corporation that is really idle, it's dormant, it's inactive, it's not doing anything, no business activity. Okay, so that is what this part 2 is. The third condition is that that company must not be owned directly, indirectly by a foreign person. So that condition here basically takes out every company that's formed here that has a foreign owner is not considered to be a dormant company or inactive, even if your company is not doing anything. Okay, even if you've just formed a company, there's no operation, there's no income, there's no expenses. The fact that that company is owned by a foreign person, whether directly or indirectly, takes you out of this inactive and dormant definition. Okay, you don't qualify. So any company that's formed by a foreign person should not even think about talking about inactive or dormancy. Okay, you do not qualify if you have a foreign owner. So the fourth condition here is that we're looking at a company that has not in the preceding 12-month period experienced a change in ownership or sent or received more than $1,000. Now let me explain this. You remember the first condition, which says that your company must be in existence on or before January 1, 2020. Now, if we're talking about preceding 12 months, then you're talking about the 12 months before January 1, 2020. Okay. So this is saying that those 12 months before January 1, 2020, okay, you should not have experienced a change in ownership or sent or received more than $1,000. So if in the preceding 12 months prior to 2020, okay, if you have not experienced any change in ownership or sent or received more than $1,000, then you'll be considered as an inactive or dormant company. Again, the fourth condition is not the only thing you should be also looking at. You should be looking at the previous three conditions that we've talked about. If any of those conditions disqualifies you, you're not an inactive or dormant company. So you have to have passed all these conditions. And we are on the fourth condition now. So let's go to the fifth condition. So in the fifth and the final condition that needs to be met, we're looking at companies, whether it's an LLC or corporation, that does not otherwise hold any kind of assets, whether in the United States or abroad, including any ownership interest in any corporations, limited liability company, or any other similar entity. Now, let me break this down. It's just saying that your company should not hold any kind of assets, okay? Whether it's a bank account or whether it's a building, whether it's a tangible property, whether it's an intangible property like copyright, trademark, and all of that, okay? And it's also saying that the assets, it doesn't matter where the asset is located, whether it's located in the US or abroad. If you're saying your company is inactive or dormant, then as long as it does not hold any kind of assets, then it's fine. Another one that you need to also look at is, okay, what if I have a company, but I don't have any assets, but then that company has ownership in another company, okay? Again, it is saying that if your company has ownership in another company, such as shares in a corporation or ownership interest in a limited liability company, then you will not be considered as inactive or dormant. Okay. So once again, you need to satisfy all of these 5 conditions. And as you can see, Congress is not playing around. They've made these conditions very narrow and so specific that not many of the companies are going to qualify for it. Okay, essentially only few companies will qualify, if any at all. Okay, so the What is considered to be inactive or dormant here is very narrow, and care needs to be taken when you're analyzing or deciding not to report beneficial ownership information. It's very important that you understand that all these 5 conditions needs to be satisfied. You cannot say, okay, I meet the first condition, so I think I'm good. No. Meeting the first condition or the second condition does not get you off the hook. You have to go through all the 5 conditions, make sure you check all of those boxes and make sure it's all good. Now, another important question that most people ask me is about, okay, what about dissolved companies? What if my company was dissolved, or, the Secretary of State has canceled it or something like that? Now, here's the deal. Companies that are dissolved before the CTA's effective date. Okay, so the CTA, the Corporate Transparency Act, became effective on January 1, 2024. If you dissolved your company before this law became effective, you will not be required to report your beneficial ownership information. However, if you did not dissolve it before 2024 and you wait and the entity was still active in 2024, even for 1 day or 2 days, you would have to report beneficial ownership information. Okay, so it doesn't matter whether you plan to close down your company in 2024. It doesn't matter what date you want to close it in 2024. You still have to file these forms. Okay, because if you did not want to report any information, you should have done it in 2023, last year. But because the law has taken effect, basically you have to subject yourself to that law and report the beneficial information report. So I hope this helps you guys out. And if it does, please click like, share, and subscribe. And I will be here to talk to you some other time on a different video. Thanks. Bye.